Welcome back to Lesson 3. So far in this section, we have been talking about the tax characteristics of your money as you contribute to your accounts. In this lesson, I want to share with you the tax rules as you're required to withdraw from your tax deferred accounts. These withdrawals are called a required minimum distribution, or RMD. This distribution is an amount that must be withdrawn from your tax deferred accounts starting the year that you turn 70 and a half and continues each year. How are these amounts calculated? The technical answer is the total tax deferred balance as of December 31st of the previous year divided by an RMD factor based off of your age. I know, boring calculation, right? But let me kind of break this down and share with you an example so you can clearly see how this relates to you. Now, coming back to that definition that I just read from the slide, the RMD factor based off of your age. Here you can see the IRS Uniform RMD table. In the left columns, you'll see age, and the right columns, you'll see what's called a distribution period or an RMD factor. The one that I've highlighted here in this slide is the age 70. Or for most folks, the first year that you're required to take that distribution out. So if you turn 70 and 70 and a half in the same year, your RMD factor will be 27.4. You can see how the RMD factor decreases each year, essentially making a higher percentage that you're required to take out of that account. Let me share with you an example to kind of illustrate some of the moving pieces and make this concept a little bit easier for you to understand. As always, I love to share stories, and in this example, we're going to talk about a strikingly handsome man by the name of Bobby, who was born on 4/4 of 49, effectively for 2019, making him turn 70 in this year. Now, also in 2019, because he was born in April, he turned 70 and a half in October, making 2019 Bobby's RMD start year. Now, going back to the IRS uniform table that we just looked at, Bobby's RMD factor is 27.4, and the 2018 balance of all of Bobby's tax-deferred retirement accounts totaled $1 million. For Bobby, using the calculation that we talked about previously, he took that $1 million and divided by his RMD factor, or 27.4, which totaled the 2019 RMD amount of $36,496.35. Keep in mind, this withdrawal has to happen before December 31st of 2019, or before December 31st of your RMD year. Now, a retirement tax tip for Bobby is that if he has multiple IRAs, he can take the full RMD from one IRA instead of taking from each IRA. This may help with his investment and income planning. Now, these distribution requirements increase each year and putting increased pressure on your tax story. If we take the confusing IRS uniform RMD table and simplify that in this graph into an annual percentage, then you'll see that the percentage that you are required to withdraw each year increases sharply the older that you get. Now, a question that we should be asking ourselves inside of this retirement taxation masterclass is, how do these RMDs affect my tax story? The answer is that RMDs are 100% taxable and often cause unexpected increases in both your tax bracket and the percentage of Social Security that is taxed. Now, we may be getting ahead of ourselves, so I'll say in Section 3, we will take an in-depth look into Social Security and how it's taxed, but suffices to say that the two main causes of Social Security taxation are pensions and RMDs. Now that we've walked through what an RMD is and how it's calculated, let's kind of bring it home to you. I'm going to encourage you to go to the resource section of this course and download the RMD Worksheet. I'm going to walk through a couple of scenarios here, but I want you to be able to apply it for yourself and to be able to determine what your RMD is going to be either currently or in the future. The slide that you see right now is the RMD worksheet. You'll see that the top section is for a current RMD, or if you're eligible to take an RMD in this year. The bottom section is for a future RMD, or if you're not yet eligible or required to take that required minimum distribution. I want to walk through with you 3 different scenarios, and you can choose which one you most relate to. That helps you understand, again, how that's calculated inside of the RMD worksheet. This first example is very similar to Bobby that we just shared. You'll see in the top section that his current tax deferred balance total $1 million. His RMD factor based off of his age 70 is 27.4, which calculated out shows an annual required minimum distribution of $36,496.35. In this next example, I want to show you a scenario where an individual retires at the age of 65 and is no longer adding contributions to his retirement plan, but is not required to take a distribution until the age of 70. So this individual starts with his balance of $750,000 and for 5 years is earning 6% inside of his IRA. After those 5 years, his balance would be $1,003,669. Taking that balance, again, dividing that by 27.4 because he just turned 70, you'll get a balance or a required minimum distribution of $36,630 in that tax year. The third and final example that I want to share with you is an individual that is still in his working years and still contributing to his retirement plans, but after he retires will still have several years before he is required to withdraw from his retirement accounts. This individual is currently the age of 55 and he has $500,000 in his account. He is contributing $10,000 per year and his account is earning 6% per year. At the age of 65, when he retires, his balance will be $1,027,231. Now in this calculation, he still has another 5 years until he's required to take a minimum distribution. So we will grow that account by 6%, giving him at the age of 70, or the year prior to this, a $1,374,357 balance. Again, being the age of 70, divides that by 27.4 and gets us a required minimum distribution of $50,159. As you fill out your worksheet and relate to each one of these scenarios, feel free to fill it out accordingly. As a resource, at the bottom of the RMD worksheet, and also a link in the resource section of this course, you'll see a link to an online RMD calculator that will help you calculate each one of these RMD amounts. In summary, projecting accurately your future RMD is not easy, but at least it will give you a good idea of what to expect as part of your tax story. Don't let the tax implications surprise you like it did for Bill and Janet. Take the time to fill out the RMD worksheet because in the next lesson, we will start to lay out your current tax story, and your RMD amount is a big part of what drives your current or future tax bracket. We'll see you in the next lesson.